So how does your credit score affect your interest rate? I'm sure most of you probably already suspect the higher your credit score, the better your interest rate's going to be, which is mostly correct unless your credit score is above a 740, in which case you're going to get the same pricing regardless. A person applying for a mortgage at a 743 credit score is going to get the same interest rate as the person that's applying at an 820 credit score because that's just how conventional financing works. There are some exceptions for jumbo loans and home equity lines of credit, which are not conventional financing, where they do give people perks for having an 800 credit score. But for the most part, if you're applying for a standard mortgage, 740 and above gets premium pricing. So what happens if you're less than a 740 credit score? How much does it actually affect your score? Well, I'm going to break that down for you, and it's actually pretty simple. So your credit score is grouped into 20-point increments. So that means that every 20 points below that 740, you face a new penalty. So if you're between 720 and 740, you have a small penalty to your rate. If you're between 720 and 700, you get another penalty to your rate, all the way down to 620 for conventional and 500 for FHA, because those are the minimum scores. The minimum score for conventional is 620, the minimum score for FHA is 500. At 640 is an important credit score, though, because you start to see bigger penalties once you drop below that 640 credit score, so kind of keep that in mind. There are some ways around this and avoiding some of these penalties, though. The major way of doing this when you're doing conventional financing would be to switch from a 30-year to a 15-year rate. Now, most of the time I do advocate for the 30-year, but if you're in one of those unique circumstances where your credit score is in the mid-600s, but you're applying for conventional financing and you don't want to pay that higher rate, it can make a lot of sense to switch over to a 15-year note because there's no penalties for having a lower credit score if you're on a 15-year loan. The payment's higher because you're compressing those that mortgage into a 15-year period versus a 30-year period, but you are paying a lot less interest. I hope this video was helpful to you. I'm going to be talking about how your credit score affects which loan program you go with next. So stay tuned next week. Talk to you later.